recipes for technical trading success in Cook's Kitchen.
Hey everybody, welcome back to Cook's Kitchen. Doing a pre-fed show here. I should do this on YouTube Live instead of having to say, by the time you're watching this, the Fed will have come out with their projections and, rate hike forecasts and the presser and all that. But anyway, I got some really good stuff for you. I got a fantastic lunch with about 6 things you're going to love. Right now we're looking at the NASDAQ 100, and I'm going to show you some breadth charts that show how we got some washout levels on Monday, the 24th. I was a buyer of the TQQQ, which is the triple long ETF for the Qs. TQQQ, and looking good today with the index popping up 2.5%. Obviously, if the Fed comes across more hawkish than anybody expects, this thing's going south, and I'm fine with that because I'll buy more of TQQQ in the 40s. So that's that. All right, so let me show you those breadth charts I was talking about. I showed. So this is what I wrote for my people in Taser Trader on Monday night. I said breadth was near capitulation, not total capitulation, but it was close. So let's go to some of those charts that I have in here, and we'll come back to this is a great table from Bespoke Investment Group on NASDAQ corrections. We want to talk about that. First, let's just get, so this is NASDAQ new highs minus new lows going back about 3 years. So you got the Corona crash in here, so you can see what a real bear market can look like or a crash. So we got pretty low. I mean, obviously NASDAQ was headed south a lot quicker than the S&P. It hit its 10% correction. I was calling for at least 14,500 on the NASDAQ, and we broke through there, broke the October lows easily. So this got down deep. This is a level, this is a degree of capitulation in NASDAQ to see this new highs minus new lows get all the way down here. But let's back out from the NASDAQ. We know that there's a lot of damage there because things had run so hot. Here's the total U.S. market. Kind of a meh, not a huge capitulation coming down into this level, but it's something. Next up, I'll show you my favorite capitulation indicator, but let's go back up to this table first from Bespoke on NASDAQ corrections, because we're in one, boy. All right, so and they listed this is since 2009, so in the bull market here, and they're listed chronologically. So you're looking at the oldest date is at the top. So 2010, 2011, and where are we? Let's see. I think we hit about 17%. So yeah, that's what they were showing as of the 24th. You see there in red on Monday, 16.9%. And the one I want to focus on is not the Corona crash, but let's look at 2018. So you see 2018 here, minus 23.6%. The reason I want to talk about that is because we're in a similar situation right now where I'll tell you what was happening back then, and you'll connect it to now. So Q4 of 2018, stocks really started to slide, and it was because the Fed was getting so aggressive. The Fed had hiked, and a most recent Fed meeting, the dot plots projected 4 more rate hikes in 2019. And the market just threw a tantrum, just like the taper tantrums of, 2015, 2016. This was a tantrum that showed up in the credit markets, specifically junk bonds and high yield, where the spreads just blew out. So any junk or high yield, just leaped away from, AAA corporate, and and then that made the stock market really nervous. Like, is the Fed gonna, implode the recovery here and put us in recession or put us in some kind of credit crunch, which could definitely lead to recession. And then what did the Fed do? By January, the Fed is like, hey, we're sorry, we weren't that serious. And they dialed back all the hawkishness. So that's how 2018 looks like now, or now looks like 2018. And the point I want to make is the NASDAQ could easily do a 20% correction. No problem. So we'll see how hawkish the Fed is today. All right, so back to some charts here. Let's go to NVIDIA. Yeah, I want to look at NVIDIA, Square, Shopify. You got a great chance to buy NVIDIA yesterday, boy. Down to 210. I blinked. Trading 236 right now. And then this little panic this week is, it's not just, what the stock market's doing. It's also that it looks like NVIDIA could pull back from pursuing ARM holdings just because they see that there's going to be so much regulatory obstacles, right? Nobody wants them to take over ARM, and maybe SoftBank will look at IPO. So ARM's not going to happen, most likely. And I think you got a great chance. Look, we filled the gap here down to 230. That was the second place. I've been telling people for months, go ahead, take your first stab at 265 on this gap from November, and then wait for 230. So I didn't follow my own advice and add more to my NVIDIA position like I should have. Let's look at Square getting decimated, and if there's any hope for it. I mean, it's barely recovering 120 right now, and I just have no idea why they hate Square so much, other than the fact that they overpaid for the buy now pay later company called Afterpay. The name of the company should be Overpay. They paid $29 billion, and like 2 weeks later, PayPal sort of made fun of them by going out and buying their buy now pay later company for $5 billion. So yeah, Square must be doing some things wrong. The name change I didn't like to Block. I get the whole blockchain thing, and obviously this decline could have something to do with crypto and Bitcoin, but as long as they don't change the brand name of the small business service ecosystem, which needs to stay as Square. So hopefully they don't screw that up, because that's the ecosystem that is so attractive to small businesses. And once they're in, they don't want to leave because they're just surrounded by so much goodness. All right. So I would be a buyer of Square here. Just saying. All right. Shopify. Let's look at that real quick. Come on, Shoppy. All right. What did this get down to, baby? This thing was down to 780 yesterday. Oh my God. And now it's back up above 900. Okay. That was Monday, actually. Yeah, I blinked there. I should have been buying Shopify, except it's a Zacks number 5 rank right now, so I can't buy it. And the reason that it's in the seller of the Zacks rank is because earnings estimates have just gotten clobbered. So, that's what's going on, is they take the wind out of the sails and the multiple expansion out of all these names, that were, trading 30 times sales just because they were growing 30%. Not so much anymore. All right. I did the Market Edge podcast with Tracy yesterday. It was her 300th episode. She's such a hammer on doing that podcast. And we talked about, we looked back at the past 7 years since, that's when she started, was in 2015. So we looked at some of the significant events of the past 7 years in the bull market, where we were right, where we were wrong, just how to play corrections and stuff like that. And this is just a correction. We're not going into a bear market or a recession here. So this is just a correction. So you want to have a plan and look for your spots to buy. I'll link to, I always do an article version of Cook's Kitchen here. And so just look down in the YouTube description and there'll be a link there. It'll take you to the article version. I'll link to the Market Edge podcast. All right, we talked about all that. Let me one more stock, and then I want to show you my favorite capitulation indicator. Okay, here's the trade desk. We were buyers at 60 on Monday during the meltdown. It's fighting back. It looks like a lot of software. It's Shopify, Square, whatever. They're not screaming higher because we're sort of in a new valuation regime where there's no more tolerance for this 30 times sales business. What's funny about Square, I should have mentioned, is Square got down to trading under 4 times sales. I just can't figure it out. But it is what it is. If you have an outlook going out 2 years, I think you buy Square and Shopify and the Trade Desk and NVDA. Buy them all. All right, let's see. Where's the other chart I want to show you? I'll just go to my overview here because it was the chart that I showed last night. All right. Oh, and this is the S&P chart I showed last night, showing, hey, this is some constructive action. We don't know what the Fed's going to do, but this is constructive action. There's long wicks. So what if we're below the 200-day? That's healthy for this bull market. But let's go to my favorite capitulation indicator, which is data as of Jan 24th, because you only get this data it's not calculated right away. So this is the S&P 1500, new highs minus new lows expressed as a percent. And the S&P 1500, if you don't know, is just the S&P 500 plus the mid cap 400 plus the small cap 600. The S&P has its own small cap index with 600 stocks in it. So those add up to 1,500 stocks. So it's a really good breadth indicator, or anytime you look at these 3 indexes, which are, representative of the spectrum of market capitalization. So what I like to see for a good washout is this baby come down into 2030. And on Monday, it only did -9, and that's barely a blip. It's barely a Band-Aid, especially compared to the Corona crash. So, and that's probably because energy and banks as sectors have done so well recently. And it's almost like institutions are sort of hiding out in energy and banks. But that could definitely change if the economy's slowing and the Fed is staying hawkish. We're going lower, and you'll see energy and banks get taken out too. All right, so that's all I got today. Hopefully this has helped, even if you're watching this after the Fed, so you can make a plan for how you want to react, what you want to buy. All right, again, link description below. We'll have a link to the article version, and we will talk to you next week.